Welcome to the 2025 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Sunday edition, March 9th, 2025. Please be sure to subscribe to this channel, ladies and gentlemen, for the latest updates on news, financial news, interpretation as it becomes available. And I appreciate everyone's support. We're going to be talking about this economy. We're going to be talking about the jobs that were added in February under the first full jobs report under President Trump's second term here. We're going to be talking about why the dollar is going to be having its worst year since 2008. The U.S. dollar, as you know, has been under inflationary pressures for a while now. And we're also going to be talking about the crypto. Some banks are engaging in crypto activities and what that might mean or signal for the overall economy here. And so we have just a little bit briefly to get into this weekend. I hope everyone's having a great weekend here, wherever you may be in the country. So this came out by CNNBusiness.com. It said the U.S. economy added, quote, 151,000 jobs in February in its first full jobs report under Trump's second term. Now, this may sound good, but you have to realize that we're in this post-pandemic, allegedly post-pandemic economy, and 151,000 jobs is not a lot. This is below estimates that a lot of economists have had here. Unemployment rate is going up to 4.1%. Remember, I told you the unemployment rate, we know the real unemployment really is at 8 to 10%. If you count underemployment of a lot of Americans who have 2 and 3 side hustles in addition to the main job. But also the unemployment rate is going up officially from 4.1% up from 4% from the month before. And you can expect this to continue, ladies and gentlemen, through the summertime. I don't see that easing up anytime soon. And you and I know that that's going to be the case, unfortunately. Now, the good news is it's a slow trickle. It's not a fast stream of unemployment yet in any of both the public, private, and independent sectors, small business sectors. But we can expect those numbers to tick up as we get closer to the summer months here. Now, so we've had only 160. Expectations I told you were for 160,000 job gain. We only got 151,000, and that number's been declining since last November. These jobs reports, we're getting less and less jobs created, and the jobs that they are creating, of course, are low paying or medium paying. It's not high enough paying to handle the 21 highest metro cost of living cities in the United States, meaning you can't get a 1-bedroom apartment off the type of money that they're giving you in the jobs that they're creating, at least right now. Now, that may change in the future, but this is what we have going on now. So the article from CNN Business goes on to talk about DOGE, of course, the Department of Government Efficiency, and how the cuts there have been making in the Postal Service and in the VA and other areas. I heard that they cut some jobs are shaking up some positions here. That has caused a tick up slightly in the unemployment rate, according to this article. So there's signs of softness in the U.S. economy. Restaurant job losses. I don't know many people. A lot of Americans are cutting back on eating out maybe once or twice a week and not every day at their jobs at lunch. Because the prices are high. You go to Dunkin' Donuts, you go to Texas Roadhouse with 2 people. That's what, $50, $40 almost. You go to some other places. So everything is going up in cost besides the paychecks here. And this is going to be a big problem for a lot of small business owners as they try to compete with the megalopolies, the oligarchy, big companies, because they can't compete in wages and benefits and other things too. They're going to be cutting because restaurants lost 27,000 jobs in February. That's piling on to the 29,500 jobs lost in January. Now, this is the biggest hit since COVID times, according to the Bureau of Labor Statistic data. Like I said, small businesses are hit, especially those in food services. And the quality's gone down. The food quality's gone down. And with the tariffs, it's only going to continue to get worse. Now, why the dollar is having its worst year since 2008, what it means for you. This was on Yahoo Finance. I thought it was interesting because the U.S. dollar has declined more than 4% since the start of the year. It's its biggest drop since 2008. And you remember in 2008, we had the big recession. The Great Recession of 2008, 2009. So the U.S. dollar, even though it's the least sickest child in the basket of goods, the basket of currencies here, it is suffering some heavy losses here. And it really has to do with the purchasing power. Most Americans here, that the weaker dollar would costing more dollars to get the same amount of goods here, even though the quality of the goods is the same. And so this is increasing recession risk for Americans and a lot of people. And this could be, in fact, a worldwide recession. But instead of starting in other countries, it's going to start here at home first. And now no one knows the date. No one knows the hour when that may be, but the U.S. dollar did decline 4.2% between the start of this year and Friday's Dow Jones close on Friday. So that's very, very concerning here. European currencies, the euro, of course, has been the biggest winners of the White House's economic and political reorientation. The euro was up 4.5% this past week, boosted by Europe's plans to increase defense spending and stimulate the economy. So, Europe's euro was going higher. The pound probably is going higher. Sterling pound, other currencies going higher. Dollar's going weakest. Now, so the weakness comes. So the dollar is falling, like, again, because of the tariffs. Of course, we talked about that earlier videos, how the tariffs are coming into effect, even though some part of the tariffs have been postponed until April. The dollar is still going to be in trouble because we have so much printed up, and it's going to come home to roost. So, speaking of that, what is going to replace the dollar, the currency, eventually? Now, people have been speculating, of course, a digital currency. And I'm not saying it's going to be some kind of Bitcoin or one of these other alternate coins that people have been talking about. I do not know. I do not know too much about the crypto space at all. But I do know that right now, Reuters.com was reporting that U.S. regulator clears paths for banks to engage in some crypto activities. So U.S. banks are engaging in crypto activities. And so this is interesting because we know that the U.S. dollar is going to be either replaced by some kind of digital currency, some kind of system that's going to be implemented worldwide, not just a SWIFT system, but something that's going to implement it. It's going to be some kind of digital currency that is yet to be revealed. So the cryptos, them paving the way to get the banks used to dealing with cryptos, either through some kind of IRA or some kind of gold-backed crypto. This is what the activities mean here. And so we have to be very cautious about this as we see these changes, because technically our money really is digital. They type digits on the screen. As you know, the banks, they don't really have that kind of cash, quote unquote, on hand in the safes like that, but it's digital. You know, they type the numbers into the system, whatever system that is, and they create these loans and various crypto denominations. So this is what they're going to be doing in these crypto activities, whether it's Bitcoin or some other kind of Cardano or Dogecoin or some other kind of alternate coin that you guys are probably aware of know more about more than I know. But the crypto, what they're signaling is that they're looking at alternative means of payment other than cash, gold, and silver, and the traditional means that we'll become used to. And this is going to be an increasing trend here, ladies and gentlemen, as we head toward the future. A lot of people are going to be moving away from cash because cash creates a safety hazard, for these small businesses when they have to go take their stuff to the safe. You see these big Brinks trucks and all that kind of stuff. Even though they have armed guards, it's still a safety hazard, and it just creates a lot of crime on the streets and things. And as jobs get fewer and fewer, you can bet believe that crime is going to go up either intentionally or unintentionally. And it's just not going to be enough officers, enough law enforcement officers, either undercover or uncover, to be able to deal with the crime that we're going to be seeing in these major cities due to the fact that job shortages and that when people see people carrying around this paper money, or they assume people have paper money, they're going to take whatever they can get, regardless, because it becomes a means of survival at this point. So just be on the lookout for that as you continue to go through your daily life here. And once again, we're going to be talking about the jobs report coming up on Wednesday of this coming week here, and we're also going to be talking about the impact of the tariffs on some of the local goods here, whether it be particularly grocery prices and also the automobile appliances, and to a lesser extent, the digital appliances like computers, laptops, cell phones, stuff of that nature. That takes longer for the tariffs to take effect when they do take effect, some of them next month. So enjoy your weekend. God bless. I'll talk to you soon on the next episode. Thank you for listening. Take care now.